So we love working with investors, but obviously this 0% down, we're going to be talking about primary homes. There are no 0% down options for investors, unfortunately. So these will be some primary home examples using some of the specialty programs. So Jose will probably have a few different examples. We like to use the national examples, right, that work in every state since we are a national company. So these will be more general options here. So Jose, if you're ready, let's go ahead and check out some 0% down options.
How you guys doing this morning? Thank you for joining us. Daily Rates Live with the Mortgage Calculator. So 100% LTV financing are our options for today. Couple different ways to reach that objective beyond the obvious examples here. So let me jump right into it. All right. So our first example here, what we have is some purchase examples for you today. So our first example here is a VA loan. As everybody knows, VA loans are 100% LTV. No mortgage insurance is ever applicable on a VA loan. There is a funding fee unless your veteran is exempt from the funding fee because they have at least a 10% service related disability, in which case the funding fee is waived. So in our examples right here, we're looking at 7% as our lowest cost option, actually having a little bit of a lender credit. And we can buy that down all the way to 5.625%. And we do have lower rate options than that. That would be under a scenario where you're not getting any bona fide discount points, and that would probably be the maximum that you could pay in points for this loan amount and still be in compliance, unless the seller is paying seller credit towards the buyer's closing costs, in which case any seller paid points are not counted in the compliance test. So you could certainly get a rate much lower than that if you have seller paid points. Our next example is again VA financing, but this one is for our house hackers out there that we love. This is for a 2 to 4 unit property, so it is same rate, 4 units, no differentiation. And again, as you can see, no loan level price adjustment either when going 2 to 4 units over a 1 unit property. So we have 7% again, lowest cost option, and 5.625 lowest rate option for a 2 to 4 unit VA purchase. Now, USDA is our other true 100% LTV financing option. I will note that USDA is for 1 unit properties only. You cannot get a 2 to 4 unit property, or so in other words, can't get a duplex, triplex, or a fourplex with a USDA loan. As you all know, the main benefit for USDA loans is not really the 100% LTV. That's the icing on the cake. The real benefit to the USDA loans is that they are geared towards rural property purchases. So where most loans would hit a hard stop because of the rural nature of the property, of the comparables being too far away, and the different things that being a rural property would face, USDA will accept those parameters. And really great rates on top of that, because you're looking at here 6.5% with a little bit of a lender credit, and then you're looking at buying it down all the way to 5.625%. So now I'm going to throw a little twist on things here, different ways to skin the cat, right? Here we have what essentially is another 100% combined financing option, because here we're getting the FHA 3.5% down loan, and then we are combining that with a forgivable second mortgage equal to 3.5% of the purchase price as well. No payment is due on that forgivable DPA. And if after 60 months or 5 years, the first mortgage is current and the borrower is still living in that property as their primary residence, then that second lien is forgiven. There are different rate options, but I just picked here the one that is closest to par, which because normally the DPA borrowers are already a little bit pressed for funds, so no sense in any buy down there if not necessary. So here, this is pretty much our par rate almost with a point zero 0.05 points or $245 for 8.625 on this one unit DPA purchase at 100% CLTV. And now it gets even better. We can do the DPA FHA loan for a 2 unit property, right? So it does get better. The only difference is that there is a half a point or zero point 0.5 points in fee. So our rate goes from a little bit of a lender credit to a little bit of a loan discount, 0.418 at 8.625 to get that 100% CLTV loan. And then last but not least, this is another way to reach the same objective. This is a 3% down loan, either home possible or home ready, which are the two 3% down affordable financing options for Fannie Mae and Freddie Mac. Now, these loans do allow combining a community second up to plus, 100% LTV plus. Actually, you can go more than 100% LTV with the community second. Now, the community second does require a payment. It's not a forgivable DPA, but again, if you want to be able to go to 100%, and in some cases, I believe you can go even higher than 100% CLTV with the community second, this is a great option. And again, 6.99 with a little bit of a lender credit, and you can buy that down to 6%. So, very good options, giving you five different ways here that we can reach 100% LTV, CLTV, or greater for your purchase loans.
All right, I don't see any questions there. So I guess we'll go ahead and wrap it up.